you've lowered your forecast for the world economy. There's a huge virus in China. The markets are a little bit in a limbo state. If you look at risks to the downside, what are your top 3 ones?
It is uncertainty that is at the top of the list. Uncertainty can be caused by many factors. Trade tensions were last year's #1. We have seen that from the start of the year, we got climate shocking us in Australia with the fires. We had tensions in the Middle East. Now there is concern about a SARS-like virus. And I think we have to recognize this is the new normal. We are also keen to see government stepping up on the policy front. Monetary policy has served us well, cannot be the only savior of global growth, whether we would be ambitious enough on the policy side. And we want to see how the consequences of prolonged interest rates may play out.
Coming into 2020, you talked about how the global economy is in a precarious position. Given the coronavirus, is it possible that you have to relook at the numbers, your projection, which was already reduced?
Well, let me first say that actually at the start of the year, we are in a better place than we were in October, when precarious was the word we used. Why we are in a better place? Because trade tensions receded with the US-China deal, because monetary policy has done a decent job. We had 49 central banks cutting interest rates 71 times in a synchronized manner, and that boosted global growth by 0.5 percentage point. And we also are seeing signs that trade and industrial output may be bottoming out. Now, you rightly said, but you downgraded your forecast. It was really 2 things. India, that abruptly slowed down, and a couple of countries experiencing unrest. Overall, however, the forecast for the world now is a bit better than it was in October. This being said, we do have to accept in a fast-moving world that is so interconnected that we are more shock-prone. And therefore, a big task for business, for governments, for citizens is to adjust to that new normal.
Could a market correction provide a shock? So if you look at equities, are they overstretched compared to the strength of the economy?
Well, we are not to expect anything else when we have prolonged period of low interest rates. We do see investment in equity going up. Whether or not this is a moment where we might see some movements is really to be seen, not to be predicted at this point. I don't want to talk it one way or another.
Fair.
Well, we're seeing huge debt right now. We're talking about a record of $250 trillion. At what point should central banks be concerned? We heard from the Fed saying, you know what, there is no bubble, we're not too concerned right now. Are you concerned that a central bank like the Fed is adopting such an attitude?
To be fair, the consensus at the moment is that there would be low for longer in the interest rates. The world of central banks is predicting accommodative policy for quite some time. With low interest rates, that danger, of course, is lower. But there are 2 things that I have been speaking about loud and clear. One, the buildup of debt is reaching a point when, for some borrowers, it presents a present danger. For example, poor countries, 43% of the low-income countries are already at or very close to debt distress. Companies that are borrowing at higher rates, they should be concerned and be very careful. And secondly, what we need to recognize is low interest rates means high appetite for yield. High appetite for yield is high appetite for risk. So yes, we have to be more focused on that.
But lower interest rates also mean that maybe potentially central banks don't have the ammunition, don't have the tools to deal with the next downturn. Are they exhausted?
Well, some are, some aren't. If you look at the Fed in the United States, they have space. People's Bank of China, they have space. A number of countries that are doing also better in terms of growth have space. But many are those that are already at negative territory, of course, they don't have that space. And this is why it is very important to turn and look at other instruments. We have two messages. One, fiscal tools. They ought to be looked into more seriously today. Not when we are worried today.
But will they?
You know, some actually are making good moves. South Korea, good fiscal stimulus. Actually, Japan came up with a not bad package of stimulus. The Netherlands, you know, the Dutch, very careful with their money. They're coming up with stimulus. Germany put out a plan to increase the spending. And I'm very hopeful that with this whole conversation around climate, we will see an ambition to invest in low-carbon, climate-resilient economy. There is no shortage of things to invest into, but they don't translate easily in viable projects. And I think we have to say, no time to waste, concentrate on boosting growth.
Managing Director, you talked about countries which have the capacity to move, but countries like Italy, for instance, well, how much can they move? I mean, how much fiscal measures can be implemented? And it's not alone.
Well, it is true that countries that have a more narrow fiscal space face more difficulties. But even in these countries, they can be careful review of policies and look at ways in which there can be redirection of public spending to be more conducive to stimulating growth. And of course, we all have to recognize the need to build buffers. We have been saying this for the last 2 years. Build buffers, you would need it. Build buffers, you would need it. And that kind of thinking longer term in a more uncertain world, that is going to be a completely a must-have in the future. Actually, not in the future, now. The future is today.
And Bridgewater believes that actually because of the central bank action of the last 10 years, they've basically ended the boom-bust cycle. If they have, you know, first of all, how difficult is it just to understand where we are in the cycle? And could everything be completely out of whack?
Well, if we are talking about scenarios and probabilities, there is always a risk that we may end up with a overlay of factors that are creating a much more significant difficulty for the world economy. Right now, I don't see that. What I see now is that there is some increased awareness among policymakers that they have to take action. And I think you and I, the three of us talking about that, hopefully people are listening. Focus on what you can do today to provide more stability for the economy and better conditions for growth. We actually were working on how do we define the status of the economy today. Could not come up with only 2 words. We had to come with 4, and it is tentative stabilization, sluggish recovery.